Hi and welcome to video number 7 of our Day Trading Explained series. If you remember, guys, we closed our 6th video with the explanation about earnings, the importance of earnings to day traders, and how stocks react on earnings. And we saw that example in Nike from June the 27th, where the stock reported earnings, gapped up before the market opened 10% and continued to trade higher between the price of 70 and the highs of the day were 74.20, and that created an opportunity for a day trader to make money on the trade long. And why is that? Because earnings are important to day traders because they create excess volatility in a stock, and they create interest from institutional traders that are trading according to the earnings report. And if the earnings are great, they may increase their position or buy into that stock, or if the earnings are terrible, they will sell, take their money out and move elsewhere, maybe buy Nvidia again. So that's super important because a lot of money is changing hands. And if you remember, we saw the daily chart and you saw a huge increase in volume versus the average. In that case of Nike, traded over 100 million shares, while on a normal day it trades 10 million shares. That's 1,000% increase. That's dramatic. So then we talked about the link, and let me show you how a normal day looks. A normal day at the office in terms of earnings, when there aren't that many. Sometimes there are more than 100 stocks on this list. But if you go to the nasdaq.com/earnings, and the link is posted in the description, they arrange the list according to market cap. So the most important stocks are at the top, as opposed to Yahoo Finance, where it's messy and they arrange it according to, I don't know how they're doing it. It's shameful, because Yahoo Finance is such a great website for us investors and traders, but the earnings is a total mess there. Okay, I hope they got the message from me. Anyway, this link is amazing. So Nvidia, the biggest and most important company in the world right now, is listed number 1, and this symbol, which means moonlightning, is telling us that Nvidia is reporting earnings after the bell, meaning after 4 p.m., and CRM after 4 p.m., and Synoptis after 4 p.m., while BMO is reporting earnings, and this sunshine means they're reporting before the market opens. So the stock may gap up or may increase some volume or get some volume in the pre-market, and then you will be able, if you want, to trade Bank of Montreal during the market hours. So the idea here is that the list here is posted weeks in advance, maybe months in advance, who cares, weeks in advance. So I know exactly when the next Nvidia report, not only me, I'm not important at all, we are not important, but institutional investors know when is the next report for Nvidia. And those dates are fixed. Now, it's not like Nvidia cannot report something that they decided that's essential to investors out of the blue. That can happen, but the earnings report has a particular fixed date in advance. So this is a source of knowledge for us, and we can obviously access this list, which is totally available to the public, free of charge, of course. And we know that we have one source of stocks that we can trade in during the trading hours, and some of those will be great movers, others won't be. On some we will be able to make money, others we won't. That's not the part of the discussion. The idea here in this video, I want to talk about additional sources of stocks that are relevant to us as day traders, and it means stocks that are moving way above average intraday. We don't care what happens after the bell closes, we are selling the position. But we need a lot of volume and a lot of power, so the stock will move intraday, so we can capitalize and make money intraday. Because if the stock is not moving intraday, what the hell are we doing with that stock? We have 6,000 other candidates. Okay, so this is one source, the earnings. Another source is watch list that we're building ourselves. And you can see here on the platform, this is a very, very helpful platform from Momo. That's a Chinese broker. It's open to Chinese and Far East, and of course US investors. I don't know if others can practice with this platform. I cannot. I don't live neither in China nor in the US, and as a former let's call a resident in Canada, I don't know if I can apply. Now I'm not a resident of Canada at all, so who cares? Anyway, it's a great platform to have research on, and I cannot advise it as a platform to day trade or invest, because I don't use it. But it's a great research platform, and I think it's one of the best right now that I've seen. Anyway, I don't have any deal with them, and all I'm doing is acknowledging. So let's go back to our business. Watch list. Watch lists are lists that we are preparing, and every broker, I have to say 100% of brokers that I traded in the past, and I traded with many, offer this option. So on the watch list, what you do, you open a watch list, and then you add those symbols that you like. Here you have a watch list that I prepared myself. It's called Big Names. And you have here names that are basically the most important stocks in the market, starting with Nvidia and MSFT and Amazon and Palantir and okay, a lot of names. So those names become source of day trading for me. And I will look to this list. If I'll see that one of the stocks in the list is way stronger than the S&P 500. We talked about it. So I want to see stocks that are up in this list 3%. This is the biggest number that we see right now. Let's acknowledge that. So that's Oracle. It was up 3% Thursday. And on the weak side, we have Alibaba down 2%. So I may look at Alibaba and Oracle to see what's going on. Maybe I can trade those stocks. I won't be looking at anything that's in the middle. So the middle is no go for me. Why? Because most likely the middle looks like the S&P, so it doesn't have any edge over the market. It means that institutional investors are not piling up to buy Walmart or Apple or Taiwan Semiconductors on that particular day. But maybe they're piling up to buy Oracle, and if institutions are piling up to buy Oracle, obviously I want to follow those leads or their leads. So I can build watch lists. Again, this is a watch list of big names or important stocks. That's actually the right name for. And of course, I can basically build a lot of watch lists. I don't know what is the limit on per watch list per broker, but whatever. Let's say you can build 2 or 3 watch lists, and that will be enough. So I have a big names watch list, an IPO watch list. Those are stocks that were IPO'd a couple of months ago. ETFs that are important to the market. We're going to discuss them in another video. And watch list 1, which is stocks that I added along the way in that watch list, and that's pretty much it. I don't need 25 watch lists, okay? But the watch lists, remember, are lists that you prepare as a trader or an investor. You bring in your the stock that you want to follow, and there are many criteria why you bring in a stock. Let's say yesterday you noticed that the stock, let's call it for that matter, I don't know, SEDG, whatever, gapped up and closed up with 20% gain. And maybe this 20% gain will bring the stock a continuation play, another day up, or maybe another 2 days up. And so you're thinking, okay, I missed the first move in SEDG. Let's add it to one of my watch list and see how it performs on the day after. Now keep in mind, we are a pair of eyes and one brain. We cannot see what's going on. We need to focus, and focus is very important because we have 5.5 hours of trading pretty much. Let's call it 6, and then we need a small break in the middle. So we cannot afford to spread around too many stocks because who's gonna, watch, analyze, act, trade, manage. There are so many time consuming actions that are factored in before you take a trade. So you need to be, you cannot spread around. So you need to concise and be looking exactly at what really is important and matters. So again, you have the earnings, very important. You have your own watch list, important but not very important, because those lists are, random lists that you prepared maybe 2, 3, 4 weeks in advance. And here you have those lists that you are updating all the time. And on top of those lists, most of the brokers will offer screeners. Now, what are screeners? Screeners are basically watch lists that you can prepare live according to certain criteria. So let's look at, for example, a screener. I called it a long screen, and I told the broker, okay, bring in stocks that are priced, you can see here, priced above $10. So I don't want the stocks under $10 in my list, in my screen. I want the price to, the percentage change of the price to be above 5%. So I don't want to be, I don't want to see stocks in this list that are below 5%. So it's possible that a stock was up 8%, it pulled back 4%, it will disappear from the list. Yes, it's possible. But that's my prerequisite, at least 5% or more. And you can see here on this list, I have stocks that are up 130%, 120%, at least 1, 2, 3, 4, 5 stocks that are up double digit, more than 10%, and some others. So I have two criteria: above $10, above 5% in terms of the price, which changes all the time. I want the volume to be above 5 million. What does it mean, and why is it important to day traders? It's important because we want to trade liquidity and volatility. So 5% more in terms of price brings me some volatility, and 5 million shares at least brings me the liquidity, because I want to get in and out relatively fast. I want to buy without slippage, maybe with a limit order, and I want to sell maybe with a limit order or with a market order, and I don't want to incur slippage. And this is important. Liquidity is very important for us. And on top of that, I have another prerequisite. I want this indicator that you should write it down because it's super important for day traders. I want the intraday range to be above, at least above 5%, and in some cases more. But let's stick to 5% in this example. So why 5%, and what does it mean? It means that if the stock price is $10, it will move at least 50 cents between the highs and the lows. And if the stock price is $100, it will move in this case $5 between the highs and the lows. So $5 is a big enough range for me as a day trader to take profits. If I'm taking only $2 out of those 5 of movement, I can make a great living out of that. That's super important for us as day traders. So a list like this, okay, a screen like this that brings in 50 stocks, I cannot manage. Okay, I have to sort them out. But if it brings me 10, or in this case, how many are 16, maybe I can manage. So according to your experience, or in this case my experience, I will sort the list out, and we'll see in the next video how does it play out. Okay, we'll see it in the next video. How do I get along with 16 matches, which is still a big number for a day trader. Keep in mind, I'm one person, 2 sets of eyes, and need to make decisions relatively fast. So guys, we'll see you in our next video.